Article 50. Designated Zone. Designated zone refers to a specific, legally defined area within the state that is officially recognized for VAT purposes. This recognition is subject to the area meeting the conditions and criteria laid down in the executive regulation of this decree law. The concept of a designated zone exists to grant certain areas a special tax treatment, which differs from the treatment that applies to the rest of the state. 1. Treatment as outside the state. Even though a designated zone is physically located within the geographic territory of the state, for VAT purposes, it will be treated as being outside the state provided it complies with all the regulatory conditions set out in the executive regulation. This means that transactions within the designated zone, and movements of goods into and out of it, may be subject to different VAT rules compared to transactions conducted within the rest of the state. 2. Conditions to qualify as a designated zone. The executive regulation specifies a set of mandatory requirements that an area must meet to be classified as a designated zone. These conditions may include, but are not limited to: the area must have clearly defined geographic boundaries. The area must be subject to special control and supervision by the relevant regulatory and tax authorities. The movement of goods into and out of the zone must be subject to strict customs procedures, ensuring that the zone is treated as a controlled customs area for VAT purposes. The area may also need to comply with specific administrative, record-keeping, and operational requirements, which are necessary to maintain its designated zone status. 3. Impact on VAT treatment. The designation of an area as a designated zone has a direct impact on the way VAT is applied to transactions within and involving the zone. This special treatment applies particularly to supplies of goods within the zone, as well as to import and export transactions. In certain cases, goods moved into or out of a designated zone may be treated as if they are being moved into or out of the state itself, thereby qualifying for different VAT rules such as zero rating or exemptions. For example, movement of goods between two designated zones may not be treated as a taxable supply within the state, provided all conditions are satisfied. However, if goods are supplied for consumption within a designated zone, normal VAT rules may apply. 4. Legal basis and authority. The special status of designated zones is legally established under Article 50 of the Decree Law. This article grants legal authority to the executive regulation to set the detailed criteria and operational conditions that areas must meet in order to qualify as designated zones. This system allows for flexibility in recognizing new zones and modifying requirements based on evolving economic and regulatory needs. 5. Purpose and economic rationale. The intended purpose behind creating designated zones is to encourage international trade, investment, and business activity, especially in sectors like logistics, manufacturing, and export-oriented industries. By treating these zones as being outside the state for VAT purposes, the government can facilitate international trade by reducing tax burdens on cross-border transactions, attract foreign investment into specialized economic zones, simplify VAT compliance for businesses operating in these zones, particularly in relation to imported and exported goods. For more details, contact us.